Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco, and my partner, Hari.
Hello.
The color of green, the man of the hour.
Yep, it's color of money.
Welcome, everybody, to our podcast. We're going to be talking about Southwest Airlines, as you saw in the title. Let's do a quick disclaimer, shall we, Hari?
Yeah, so this podcast is focused on educating you on the way that value investors invest. We don't know your financial situation, and so you should use this as a tool to help you learn, and then consult with the financial advisor for any financial decisions that you want to make.
Mm-hmm. That's right. Don't listen to us, but listen to us. Awesome. Let's go ahead. Let's get this going.
Yeah. So we're going to be talking about a user request, Southwest Airlines. So, Becca, why don't you tell us, so first off, we're going down our value investor checklist. The checklist is something that you can follow along with if you send us an email, info@valueinvestor.org. Alternatively, if you want to, you can also reach us on Twitter @ValueInvestorTV. Both places you can ask for the checklist or ask us questions. Or if you want to be like Carlton, who sent in the request, you can get us to cover a company on the show.
Mm-hmm. Yeah. On that note, thank you, Carlton, for sending us sending us the request and also following us on Twitter. Thank you for that. We're really trying to build a community of value investors online. So any help would really be great.
Yeah. So Becco, let's move on to Southwest Airlines for the three people on the podcast who haven't heard of what Southwest Airlines is. Tell us what they do. Yeah,
sure. So Southwest Airlines is mostly domestic. They have a few international flights, but mostly domestic, kind of budget airline. So they fly on a economic scale. They're relatively more affordable than other kind of bigger, more beefier airlines. They're also really known for their culture, their transparency, as they call it.
Yep.
They started in 1971, only flying in 3 cities in Texas: Houston, San Antonio, and Dallas. And then they're now all over the country, and they're now expanding to locations like Hawaii, which is what we'll talk about later on. But
yeah, and small after an acquisition of AirTran, they got some international travel to some Caribbean destinations, Mexico, that kind of thing.
Exactly. So go ahead.
I think there's we should also mention, from, you were talking a little bit about that culture. Their founder, Herb Kelleher, was kind of a maverick in the way that, they do things, right? Mm-hmm. So tell us a little bit about their, they don't operate off of a traditional hub and spoke kind of, setup. So tell us how that works.
Yeah. So the hub and spoke, there are a few things that they really do well, and that's why, like I said, the transparency is one, the culture is one, the operational efficiency, all those things really make what Southwest, really, those are the things what really makes Southwest. And one of the things that they really champion, has been, like you said, maverick about, is the operational efficiency, and the way to get to that is their hub and spoke model. So, point-to-point model. Hub and spoke is the model that a lot of big carriers use. For example, United or American Airlines. You gave a great example. So for example, American Airlines. If you want to go somewhere, you would most likely go through one of the hub cities. For example, right. Chicago, or what's a big one for American?
Dallas. I think it may be New York. Most cities or most airlines use New York as a hub, right, just because of the popularity of the city.
And then if you are thinking about United, you're most likely going to go through, for example, Houston or Chicago.
Yeah.
That sort of thing. So that's the hub and spoke model. Southwest does it differently, right? Southwest does it. They use the model called point to point. So let's say you want to go to Los Angeles from Houston. you would stop by Phoenix and then go to Los Angeles instead of flying to Chicago or Dallas and then from there going to Los Angeles. So it's much more efficient. Although they do have a few non-stop direct flights, but it's a lot of if you book a flight, it's going to be one or two layovers in these cities.
Not necessarily, but for the most part, your layover will be it's a 2 to 3 hour flight is what they target.
Yep.
And then they're trying to hit those 2 to 3 hour windows wherever you go, but they're sometimes longer, sometimes shorter.
Exactly. Approximate. A fun factoid about Southwest: an average trip is approximately 2 hours. So, like you said, it's very very managed to the nitty gritty, like the flight time.
Yeah.
And I also want to point out, in terms of the operational efficiency, we talked about point to point as one of the ways they achieve operational efficiency. Another way they achieve operational efficiency is by using one type of airplanes.
Right.
So their sole supplier of airplanes is Boeing. And within Boeing, they only use one type of airplane, and that's 737, Boeing 737. So they have different flavors of 737, so 737-800 series or 737 MAX 8 series. So the different flavors. MAX 8 has been in the news lately because of the accidents. We'll talk about that in a bit. But one of the things that they really point out is because they're using only one type of airline, they can really drive that operational efficiency. So what does that mean, right? It means, the parts. If something breaks down, you have all the mechanics really know what's going on for different planes, so you can really work on them quickly. In terms of seating, because you're working with the same type of airplanes, you don't have to mess around with different types of optimizing for different airplanes, things like that.
Yeah, and that also leads to training for mechanics is simpler. You don't have it's easy to swap pilots.
Mm-hmm.
A lot of pilots will train on the same plane,
mm-hmm.
And only fly one type of large commercial airline.
Right.
Which is why, when they had the Dreamliner, Boeing had the Dreamliner come out, they had a lot of pilots who trained on it and then couldn't fly until, everything was sorted out.
Yeah.
And so these 737s, as far as I know, the Boeing, anything in that 737 line, you can fly. If you train on one, you can fly on the other. So,
yeah.
What I think it really comes down to is, for these planes, they only have to have one type of training, one type of So it's effectively they're not micromanaging different pilots or having different groups. It's you learn this, you can fly any flight that Southwest goes on, and I mean if you listen to the stewardesses and the pilots, they kind of just hop around,
That's
they'll
true.
fly one leg of the journey,
mm-hmm.
and then they may hop off and go somewhere else,
mm-hmm.
And then they end up at home, to sleep at night and they've flown all over the country, just doing that. So, however, they don't really mention that in the annual report, how they do this, but all of the pilots, everyone is kind of interchangeable. Like they'll never run out of this type of pilot for this plane, and then you have to change planes just to get on to, which I've had to do numerous times.
Mm-hmm. Yeah. So just to summarize, I mean, the simple scheduling, right? Maintenance it's easier. Flight operations, like you mentioned, and then training activities. Those are the benefits that you get from using a single type of aircraft.
Yeah.
Boeing 737. I think we talk about operational efficiency as one of their competitive advantage, right? Competitive advantage being one of the checklist items that we have to go through. The concept of moat that Warren Buffett always talks about. Southwest Airlines, we talked about using one single airplane or one type of aircraft, and then the hub and spoke, instead of hub and spoke, using point to point. There are a few things that I do want to point out about Southwest that's very different. And that is, one of the things is they're using the secondary / downtown downtown airports. So, for example, in Houston, we have the Houston Hobby Airport, which is closer to the city metropolitan area, and you have the International Bush Intercontinental Airport, which is ways out. So, in that sense, and this sort of structure, Southwest mainly actually only flies out of Houston Hobby Airport, which is closer to the downtown, which is a secondary airport, smaller airport.
Yeah.
And and because they're using downtown airports, it's better for customers, right? Better for user experience. I don't have to travel way outside the city,
right.
But also it's a smaller city, or it's a smaller airport, so the turnaround time for airplanes it's quicker. It's probably cheaper to operate in these smaller secondary airports.
Yeah.
So it really gives them a lot of leg up in operational efficiency in that way too.
Yeah. So I think there's a lot of things that we'll talk about as we go through this. Mm-hmm. About the business itself and how they're kind of migrating to, and how they're positioning themselves for growth. But let's talk about their competitive advantages.
Sure.
Because I think that's kind of also telling about how, we've talked about moats a lot in this on this podcast, and I think this is one of the telling things about a business is, for me to fly from point A to point B is kind of it's a commodity, right? Transportation is a commodity in a lot of ways. But, somehow airlines have kind of built it around with loyalty rewards and things like that. But the loyalty rewards doesn't necessarily it may translate into repeat business, but not necessarily profit, right? Mm-hmm. So, Southwest Airlines has been profitable for basically 30-something years now, right? Which is unheard of in the airline industry. Mm-hmm. And that is because of this, low-cost advantage. So let's talk about moats here for a second. So starting with, what do you see as their moats?
Yeah. When you talk, I think you mentioned one. Low-cost provider is definitely one of the elements of their competitive advantage. So when I shop around Southwest Airlines, when I shop around airplanes or flights, it's rare that I find a price that can top Southwest. It is really cheap, and so like the operational efficiency we talked about in the front end of this podcast, those translates into satisfaction from customers because the flights are so cheap. But also,
and I think we've mentioned that they're cheap, right? But cheap not where you feel gross.
Yeah.
So like Spirit Airlines is, they nickel and dime you the whole way.
Yeah.
And they mentioned this in the annual report too, that a lot of the airlines are now doing what they call the budget kind of friendly type of flights, right? And those budget friendly types are essentially you pay a very small fee to get on the plane, and then you have to take a carry-on bag or to not sit in the middle. All of this stuff they charge you for it. Southwest doesn't do that, right? So it is still cheap, but you don't feel cheated, or you don't feel like you're
nickel and dime.
You're being nickel and dime, which I think a lot of people. There's some people who have no problem with that, and then there are others who are frustrated by that kind of experience, right?
Yeah.
So Southwest, I don't think I've never felt that way, right? So, but I think it's important to distinguish between low cost and that value type of thing, right? Because just because United charges you only $40 to get on the plane doesn't necessarily mean that they make money off of that flight, right? They're just filling the bodies in the seats, and then they're hoping that you. I can guarantee you they're not making money on a $40 flight. They're making money on you booking, checking in a bag and that kind of stuff.
Yeah,
right?
Absolutely.
Right, which is very high margin for them. Mm. So in that regard, let's go back to that what we were talking about. Southwest is a value, but not necessarily at the lowest end of the value spectrum.
Yeah, exactly. So they're not the lowest. They're not like budget air, like you said, Spirit Airlines or something like that.
Right.
But they also are not exorbitantly expensive, like for example United, that doesn't provide a lot of value. So right in the middle of that spectrum in price is where Southwest sits.
Right.
And so again, kind of to your point about competitive advantage, low cost provider with value is their advantage. But I want to speak more to the value end of things. And that's why that's where I want to bring up the concept of culture and kind of brand here.
Yeah.
Right. You talked about not being cheated, not feeling like you're being cheated. This idea of taking care of people, taking care of your customers, really loving the experience is really part of Southwest's brand.
Yeah.
So I mean, their ticker is love, LEV, which I found interesting, and they're one of their main airports in Dallas is Love Field. So I mean, they really champion.
By the way, United's ticker is hate. Actually, it's not, but
yeah.
But you do feel that way when you're on United, right? Like I think they actively hate you.
Yeah.
So.
I mean, I was just talking to one of my friends yesterday, and they said, honestly, I hate United. I never fly United.
Yeah.
Our podcast isn't to just bash on United as a customer.
Actually, that's the only reason I started this, Becco. I wanted a platform to only bash United.
Only
Airlines.
bash United.
Yeah.
But all that to say, though, like Southwest, the experience on Southwest is just leaps and bounds better than everybody else in the industry.
Yeah, I think it's really important to understand. I have never found a business that treats customer service, that takes customer service very seriously, that is a bad investment.
Yeah.
I mean,
yeah.
I've never found one, and I think the reason for that is that if you value the customer above all else, then you figure out ways on the back end to make that work, right? Companies that don't do that tend to be, they're fixated on things that are not important to the thing. If you don't have customers, you don't have a business, right? That is a fundamental part of, of running things. But I think what gets lost in that is short-term, profits, cutting off your nose to spite your face in a lot of ways, right? I think the biggest thing that you see here is that Southwest really takes their customers seriously, and then that translates into very happy employees, right? You look at their employees; they are joking, and they're kind of things are fun when you get on the plane, and they've even had they have articles about how in their Southwest magazine where Southwest weddings where people got together, they sat next to each other on the plane because of their open seating policy, and then they got married, and they they'll interview the couples and that kind of they have a very fun culture about their business, right? And I think that translates into the workers being happy, and then the people who work there. When I worked in the before I went to medical school, I worked for a company that made software, and one of our customers was Southwest. And whenever we interacted with them, they were always happy. We went to a golf tournament with them. It was always fun to be around Southwest employees. They seemed to always have fun, and it translated into their business.
Yeah, for sure.
I think that's really, when we talk about this, whether you want to call it the brand moat or an intangible asset, right? But culture is impossible to replicate, right? Like. And then that translating into your customer being happy, right?
Absolutely. Yeah, so like you said, culture or intangible asset, whatever you want to call it, or a brand, it certainly does translate into happy customers and happy employees, and all those things make up a great impenetrable quote-unquote moat. Yeah,
and I think what it translates also into is their people stay with the brand, because if there's I've done this myself. There are flights where I have to take, where I could get a direct flight on United, or I could take one stop on Southwest. And I take the Southwest every time because I'm like, I'm an Asian doctor. I may get dragged down the aisle. So I'm just saying, I don't want to go down there. So no, but more seriously, I think it translates into a better experience, and that people are willing to pay a little more for that. But at the end of the day, Southwest, if you book early, you're not paying much for it.
Yeah, it's not that more expensive.
So
exactly.
So I think that gives us a kind of a, anything else to say about the moat, aspect of it?
I'll just say one more thing about the delighting the customer, because I think I recently saw a video of Warren Buffett talking about this. delighting customers is so important, because when you delight customers, not only satisfy customers, but delight customers, what they will do is they'll go out and live their lives and be a salesman for you.
Yeah.
Think about that. Think about the power of that. Every customer that it's like these salesmen, not on your, they're not getting paycheck. They're not on your payroll, but at the same time, they're out there living their lives, but championing that Southwest is the best airline. You should fly Southwest every time. Think about the power of that, and that's what happened here.
No, I mean, listen to us. We're talking about them like
there you go.
We've both flown that airline. We prefer that airline, and that's what we're saying. And why you're hearing us talk about it like that is this culture that they've built, and it may cost them a little extra to do that, but the reward, I think, is it just keeps giving, right?
Exactly.
So, I think it's a very powerful thing that when you have a culture that people are happy to work in.
Absolutely.
And then that translates into everything down the line, I think they even mentioned it in the annual report that the number of complaints is down year over
That's
year.
right.
It was a big deal for them.
It is a big deal. It's like the first thing, the front and center thing that they mentioned early on in the annual report.
Okay, so I think we've probably answered this already, but how durable is this advantage, and how long do you think it can last?
I think it's quite durable, right? I mean, the culture is very. Excuse me. Yeah, Southwest has been around for 30, 40 years now, and they've been able to establish this moat for a long time. Built out the moat, and then establish and then maintaining the moat. It takes a lot of effort, and they have done that successfully.
Well, and I think in that time, the airline industry has consolidated significantly, right?
Yeah.
So there are fewer players in the space. You don't hear about airlines popping up left and right? They're not like tech companies where the cost to start is very low, right? I mean, even if you and I wanted to start an airline, we would have to have at least, they had 3 planes. Let's say it's 3 planes that you have to start with. 3 planes is going to cost you millions, right? So it's not something that you can just wake up one day and just do, right? So it's expensive to start to an airline. So I don't see new entrants coming in and just sweeping them, out their legs out from under them. And I don't know that the bigger companies can kind of shift to this model. They've tried it in the 90s unsuccessfully to kind of run the point-to-point setup. So really, I think it's a very strong moat.
I think so too. And I was talking to a friend, like I said early in the podcast. I think one of the things that we're seeing now is a lot of the kind of personal flights. Like if I want to go somewhere on a personal level for personal reasons, I definitely fly Southwest. But for a lot of corporate travels, people do United because of the points, because of the legacy points.
Right.
So I thought that was interesting, just a divergence of the market in that way. Yeah.
Yeah. Well, and I think the legacy points is going to be interesting to see how long that lasts. If I can get everywhere with Southwest and I use it for personal, then give me the points, and then I'll use them from corporate, and then I'll use them for personal. So,
right.
Okay. Let's kind of talk about this for long-term prospects. Southwest has been around for a long time.
Yep.
And at this point, they cover, there aren't new areas that they can go to, to really expand. They bought AirTran. So what do you think their long-term prospects are?
Yeah.
For growing their business.
Right. One of the things that they mentioned they're really deliberate about is only expanding kind of in a regional level. So the farthest they'll go right now is the Mediterranean, not Mediterranean, sorry, it's the Gulf Coast.
Right.
The Caribbean. Yeah. That's the farthest they'll go. So in terms of like expanding to other markets, for example, flying to Europe or Asia or even South America, it's not something it's not something they're focused on. And they're deliberate about that because of their operational efficiency we talked about earlier.
Right.
And so in terms of the runway, in terms of the growth runway, I don't see a huge growth runway, but at the same time, their operational efficiency is so great that they might be able to get a bigger chunk of the pie domestically.
Yeah, and I think they mentioned that as expand their operations in California, do more point-to-point flights in California. I think they have less penetration in the West Coast than they do
South or
in the South or in the Midwest. So I think they have opportunities for growth domestically, expand Hawaii, that kind of stuff. But we're not talking about, I mean, they're already a large company, right? $20 billion company. So expansion is not going to be 25% a year, right? On the top line, right? But when we'll talk about this when we talk about free cash flow, because how they're using their money actually will affect their bottom line growth, which I think is very valuable. So, okay, so let's talk about capital reinvestment. So, a big part of businesses that are asset light versus asset heavy. What is required from a capital reinvestment standpoint for them to maintain their business?
Yeah. A few things. Obviously, the obvious one is the airline or the aircraft itself, right?
Yeah.
So in the annual report, they mention they have a table that shows you how many of the MAX 8 and other MAX 8 737 aircrafts they were going to order. I know that it probably have shifted now because of the incident.
And they've mentioned that it's going to be disruptive to their quarterly earnings, that they've had the Boeing thing. So.
Yeah. I mean, this is pretty telling here. Let's read through this table. So in 2019, they were going to order 21 MAX 8 firm orders. By 2025, they were going to order additional 40. And so the years in between, they're ordering somewhere between 20 to 35 to 40. And so you think about that. I mean, you're ordering that many aircrafts.
Which is still only about 5% of the fleet, though. Just
I
mean, they're slowly reaping their fleet with more of these. But.
And then the reason for replacing that is for fuel efficiency, by the way.
Yeah.
But still, they're getting 40 aircrafts every year, a new one. So it's going to be pretty disruptive with the new Boeing Max incident. But again, to your point about capital reinvestment, this is the price you have to pay to be an airline to be in the airline industry.
Right.
And not only this, you have to pay leasing fees for using the airports, and also a lot of times Southwest will go into agreement with the local municipalities to renovate their airports. So, for example, Houston Hobby, Southwest has huge presence there, so they'll work with the Houston Hobby Air Corporation or the
I think they basically the entire airport is Hobby or is Southwest.
Yeah,
so.
I think there's some Delta in there as well, but they things like that. Like for example, Dallas Love Field, the company is guaranteeing principal, premium, and interest on $456 million in bond, and that is issued by Love Field Airport Moderation Corporation. So things like this is the price you have to pay to be in this industry.
Well, and then also to maintain your aircraft too is not free.
Yeah,
right. So
exactly.
you got to pay money to make sure that the airplanes are safe and all that. And in 2018, they did have a maintenance issue that led to their first death, which I mean it's an admirable safety record for that long of time that they didn't have any issues. But these things are they have to not only when they see this, now they've stepped up their game to spend more money to protect their customers and things like that.
Yep.
And then going forward, is this MAX 8 thing going to be are they going to back away from this Boeing relationship? Because now we're finding out that Boeing and Southwest had some, Boeing wasn't telling them the whole story about, the airplane and that kind of stuff. So a lot of interesting things there that we can talk about. And that actually leads into our question about relationships that they have with, I think we've mentioned this, but customers and, no relationship problems there.
Yeah.
But suppliers, Boeing is the
sole supplier
for their airplane, right? So is there a potential problem there?
Yeah, I think that's one thing that I wanted to point out earlier was that because they're so relying on Boeing for all of their entirety of their fleet. Some mismanagement of the relationship could really pull them back.
Right.
And that's what we're seeing here.
And because a lot of their operating efficiency is tied to that Boeing relationship, right? Flying their planes and that kind of thing. I think that's the a risk. I just don't see it as being a big risk because it's not like Boeing is going to, go away tomorrow.
Yeah.
So and then employees, there was a mechanics union dispute.
Yeah.
Tell us about that.
Yeah, they're again, kind of relationship management. How is the relationship? The question of how's the relationship between the management and the employees? I think overall it's quite good.
Yeah.
Right. There are incidences where people will put together a union and people will fight back the management, but overall it's quite good. But one thing to note is that about 80% of the workforce, 83% of their workforce is in unions. So the unions range from the pilots have their own union, flight attendants, customer service agents have their own unions. So the list goes on. Dispatchers. So 83% of the workers are unionized, but at the same time, everyone's pretty relatively happy.
Yeah.
Where they are. So I don't see that as a big risk.
Yeah. Okay. I don't think there's anything really too glaring there. I mean, the reason that we have this checklist is that to go over this and make sure that they're not missing anything. Mm-hmm. And I would say the only thing that I would ever be concerned about with a company like this is could any of these things disrupt them? And there's always scenarios where it could, the pilots go on strike, that kind of stuff. As far as we can tell, there are no outstanding labor issues that we have to worry about. So, okay. So that kind of brings us to the end of, episode here for, part one for Southwest Airlines. Mm-hmm. So why don't you close us out?
Okay. Well, awesome, guys. Thank you all for listening. We'll see you on the next episode. We'll be talking about the financials, the management, and lastly, the valuation. So stick around. Thanks.
Thanks.